Hey guys, it's Frank here from Altcoin Buzz, and today I'm going to bring you a technical analysis and more specifically a price prediction for Cardano. The most important thing you should always be asking yourself if someone tells you, oh, it's going to reach this price or that price is why. All right, so I'm going to try and break that down in as simple a way as possible today for you guys. And first of all, Cardano, absolutely crazy price action that we're seeing. If we open up CoinGecko here. So if we go to the last 7 days, well, we obviously have the whole DeFi space going crazy. VeChain, though, is the biggest gainer. Really solid project there. Congrats to any of the holders there. So despite Cardano not being at the top of this list in terms of big gainers, have a look at this. Look at this. The market cap of Cardano is 3.6 billion. Now look at these market caps, 100 million, 100, 250, 1.1 billion. I mean, these don't even compare to the market cap of Cardano. So the fact that Cardano moved by 40% with this size market cap is just huge. And that's why everyone is talking about Cardano in this space. Now guys, we've covered Cardano a lot. Altcoin Buzz was proud to be a media partner at the Cardano Virtual Summit. So you see we had all sorts of articles on it. We also interviewed Charles Hoskinson himself, and I really strongly suggest you guys check that out because that was a great 45-minute interview where he talks about the difference between Bitcoin, Ethereum, and Cardano, the future for Cardano, and lots of really exciting stuff going on there. So in terms of fundamentals, really strong. I love the project. I love how they're so focused on scientific, reviewed, peer-reviewed research papers. But one of the perspectives which I always take on the market is a technical analysis, because for me, in the end, price is king. You can say your project does this and that, and that you have all these things planned, but if no one's buying it, then essentially no one believes you. The market doesn't price it in. So what I want to look at is price and see where we might be heading. So the first thing I'm doing here is right now I'm on the 1 month chart. This is a very clean chart. You can see I have all these indicators here, which I've taken out just for the purpose of simplicity. But as the video progresses, I'll be adding these indicators in. So what does this chart tell you? Now, if you're like me, you're going to see this massive correction over here, all right? So this looks pretty bearish, right? Like, why did it make a 95% correction, right? Well, I mean, the reason for that is because the whole market was just going absolutely insane. And of course, it had a big run up before this, which you can't see in this chart because it was trading on different exchanges before Binance. But if you go over here to CoinGecko, you can see that it had this massive run up, which started in sort of October 2017, and Binance started listing it approximately around this point. And even just looking at this chart, you can see, as exciting as the price is right now, look how far away we are from previous highs. In some ways, that's really exciting because it means we have so much potential to grow. In another way, it means that, the market just crashed so hard and we're not anywhere near full-on raging bull market yet. And that is made most evident by the monthly chart here. So as I say, we have this monster crash down here. We corrected, but we failed and we saw another new lower low. However, now you can see that we're actually breaking out of this previous downtrend. Because when we broke this key level, 0.073, we officially broke out of the downtrend, okay? So now we're entering a potential new uptrend on the monthly chart. However, for the monthly chart to turn into an official uptrend, we would have to see something like this. We would want to see a correction down to wherever it doesn't really matter whether it's here or whether it's there. And then we would only be in an uptrend, not over here, because look, if we went up to here and then we just came back down, look, we could be right back in the bear market again. But if this crosses the previous line over here, bam, then we're in an official uptrend. Now, although we're not in an uptrend on the monthly chart, we are in an uptrend on the weekly chart. Before we go to the weekly, I would like to point out one more thing, which is really key in these markets, which is volume, okay? So you can see this big move down. We had relatively little volume compared to the move that we have here. So what does that mean? The volume represents the interest, the buying and selling action which is taking place in the market. So if you have a lot of people buying, a lot of people selling during a price movement, it adds validity to that price movement. It adds importance. It means that you can trust that this is more of a sustainable price movement. And look at this volume, absolutely massive here. These bars are pretty much twice the size of the previous bars here, these green ones over here. So it's a really good sign that this is turning into a bull market from the monthly perspective. Now from the weekly perspective, again, if we do that trend analysis, you can see that we have a move up here, and then here we have a low, and then boom, over here, when we broke this 0.565, then we saw an uptrend, okay? And then bam, we saw another move down and another move up. So we have an official uptrend on the weekly chart. And that's great news, because that means that you can assume that this uptrend will continue until previous lows are broken. And here again, you can see the really impressive volume which we've had so far. Okay, so now that we've looked at the weekly price action and the volume, let's have a look at the RSI. So look at this. This is getting a little bit scary. Now, traditionally, if the RSI is oversold, it means that the market is due for a correction. It means that things are getting a little bit heated and it's time to come back down. It does not mean, as most people think, that we're going to have a massive correction and the trend is ending, for example. It's quite the opposite, actually. If we get a move above the 70 here, which gets officially into the oversold area, as we did over here, it means that there's a strong momentum to the upside, okay? And it also means that the momentum is potentially getting somewhat overextended. So, for example, here, when it reached the upside, you see that we had a correction, but we didn't go into, we didn't destroy the uptrend. We just had a small correction down here and kept on moving up. So similarly here, this is not an indication that we're going to correct heavily, but it is an indication that we're due for a correction at some point. Now, in terms of the MACD, we're seeing very healthy new higher highs. You can see from here 0.0406, up here 0.519. 0.712. This is a very healthy laddering up, and of course we have the bullish crossover of the moving averages here. So really nothing to be concerned about here. So now let's have a look at resistance levels. Okay, so a traditional, really basic thing you can always do is to add a resistance line. So this is a clear resistance line. Why? Well, first of all, we had, if you look at it even further back, you can see that in this general zone over here, we had a touchdown, which almost touched this. Then we broke through it, we came up, resisted from it, came down, came up, resisted again from this line and came down. And again, I'll draw this as a zone for you just to show you, because trend lines are not super scientific. You really want to be a bit sort of flexible in how you see them. It's not like you reach a certain level and then that exact price point at 0.11945 is exactly where we're going to crash. That's not usually how it happens. But if you look at a sort of general price zone and see what happened, that price zone, then you can see that in this zone we found support, we broke through, we tested it, resisted, came back, we tested it, resisted, came back. But now look at this. This candle is attempting to break through this. Now, unfortunately, we could close this week below this blue zone, and then this could be, a fake out essentially. But it seems more likely than not that this is a breakout for a couple of reasons. First of all, the volume is pretty solid. Secondly is that although we have this zone here, it's worthy to look at the closes of previous resistance. So we had one close over here, and then we had another close over here at this 0.97 level, right? And look at this, we've just smashed through that. So even if this candle comes all the way back down to 0.1, we still have a potential bounce point over here to come back and find support. So again, I'm looking more at this as the previous resistance turned support, but nonetheless, it's worthy to note that this general zone here is a potential resistance zone, and that we really want to break out cleanly out of this before we can consider that this resistance is broken. But for all intents and purposes, I'm going to assume that the resistance is broken because of the volume, because we have candle closes over here, which have just been obliterated by this candle right here. Okay, so now we have this previous resistance, which I usually draw in red, but of course it has now turned into support, or at least potential support on the way down. So now let's get into the juicier side of things, which is the price prediction. So let's look at some potential resistance zones. So let's have a look at this. First of all, you can see just from the price action that we have a top up over here, and we'll draw that in red because again, my resistance levels are usually in red. So that's 1.97. Okay, so another thing that I like to do is to look at the waves. So every market moves in waves. You have waves up, you have a corrective wave down, a wave up, corrective wave down, wave up, corrective wave down. That's an uptrend, okay? Let me just zoom into this for you guys so I can make it even clearer. So look at this. We had a wave over here. which was a massive 215% move, and then we had a 22% correction, right? 200% move up, 20% correction. Then over here, we had a 115% move up and another sort of 23% correction. So what does that tell me? That tells me that the waves here which are going up are anything between 115 and 220%, just broadly speaking, okay? So if we extrapolate that from here, well then we might expect to see anything between 115%, that's in other words it's 1.428, or 200% move, which as it so happens takes us to this level. It is interesting to note that this previous high over here aligns with what would be a 200% move of this wave. Okay, what I'm going to do just for now is I'm going to draw a box of a potential resistance zone based on this information, and this box will be in red again because that's my resistance color, and that is based on the fact simply that this may make 115% move, so it's actually, yeah, that's right there. This 115 level, which is also the psychological level of this round number. So this would be a potential candidate for a resistance zone, with this as a particular resistance level at the top here. Okay, what else can we see? Well, another very basic and simple tool which is very useful yet very powerful in telling you the direction of the market is to draw this is a pretty bad drawing, let me just make it a bit better for you guys. So we take the extremes of this level here, and then we draw a parallel line going up there, and just to show you where it connects to this one over here. So we have an extreme up there, we have an extreme down here, and again we'll line these extremes up down here, and then as you can see from this channel we might expect to see some resistance in this area. So already we're starting to see some overlap in this zone over here. Based on this alone, we might say that, okay, there might be some sort of resistance along this diagonal line. So we'll just draw a red line over here to represent that potential resistance. So the next thing we can do, which is a little bit more complicated, is called using Elliott waves to try and determine where we might see a potential resistance. So according to an Elliott wave extension, these are the levels at which we might find potential resistance. At a 1-to-1 extension, and I'll show you guys what this means in a second, 123.6, 161.8. So it's really simple, guys. All this is you say, okay, remember we talked about this wave going up here. Again, I'll zoom in to make this really clear for you guys. So we have this wave going up from 0.016 to 0.055, and then we came down to 0.43, okay? So this represented a wave. And again, I'll just draw this line over here to show you. This is a wave, okay? This orange line over here. So this wave then corrected down here. So what a Fib extension is doing is it's saying, okay, well, if we saw a wave like this, we're expecting this next wave to be a certain ratio of this first wave. So that's why we use this Fib-based extension. So I'm taking my trend-based Fib extension, and it can be a bit intimidating because it comes up with all these numbers, but essentially you see this line over here, I'm taking it from the bottom over here, and actually to make this really simple for you guys, I will draw it on the trend itself. So you see this orange line over here, I'm going to take the full extent of that line, take it to the top of this wave, take it to the bottom over here, and then what these numbers tell me up here are ratios. So you see this 1 in black? That means if we had have stopped out over here, it would have meant that the second wave, if we had have ended here, it would have been an exact 1-to-1 representation of this first wave, okay? And now that is a possible resistance. However, we ended up resisting at the 1.236. And as you can see from this Elliott wave, this is indeed a potential resistance and a potential extension point. So this was actually quite a nice technical resistance. Okay, so from that, we can extrapolate the exact same thing for the next wave. So we draw another line down here. Okay, this is the corrective wave down. And then we draw another line up here. Now, of course, here we don't know where it's corrected yet. But what we do is we take let's just take this one out for now. We take a Fib extension of this previous wave over here, take it to the top over here and to the bottom. And what do we see? we see that we're actually right now at the 1-to-1 extension. So that means that there is some possibility that this would act as a resistance. However, we can see that from the 1, 2, 3, 6, that here we would be approaching the top of this channel, and so that would also represent a new resistance. And furthermore, we also have the 1618, which is all the way up here. Okay, I'm actually going to draw this over here because that's where the price is. So in other words, we have these two potential resistance levels over here. Now, in technical analysis, you can use a whole variety of tools to help you figure out where potential resistance levels are. And it's a matter of combining those tools to find areas of confluence where you can say, okay, well, there's several reasons to believe that we might find resistance in this or that area. So that's why I'm showing you the whole range of reasons for why we might find resistance in certain areas so that we can come up with a conclusion of where the sort of most likely area is to find resistance. And already my intuition is telling me that we are likely to see a resistance between these lines before we get to this red box. It's not impossible that we reach this red box. In fact, I think it's probably more likely than not that we will get to this red box over here, but that we will most likely see a resistance over here in this box. Now, there's a few reasons for this. One is that, as I mentioned before, we did a 1-to-1 extension of the first wave, and we saw that it corrected at the 1, 2, 3, 6 level. So as you will recall, this first red line is the 1, 2, 3, 6 level of this wave going up as a representation of the wave before it. So there's some reason to believe that we might correct at this level. And this level, of course, coincides with the top of this diagonal channel that we've drawn here. And the same thing goes for this level over here. You know, we might see another 1 or 2 weeks of bullish price action, but once we reach this level, it's more likely than not that we will make at least a 25% correction. And why 25%? Well, because the first wave we went up, we made 25% correction. The second time we went up, we made a 25% correction, okay? And the reason I say at least a 25% correction is that we've had quite an explosive move up. So if we look at this whole wave, we can see that this big wave over here is a 600% move up. And again, the easiest way to do this, to look at this, is to look at the monthly chart. So we have this 600% move up. Using a Fibonacci retracement tool, what we're seeing here is that, you know, unlike on the weekly where you can see a move up, a move down, a move up, a move down, the monthly has not yet retraced. So in any bull market, the monthly at some point is going to retrace. And let's say, for example, we do get to this zone over here. It's not impossible that the monthly chart will start to retrace. In other words, we will see red bars coming down on the monthly. But okay, let's take it back down to the weekly time frame, because the horizontal levels are also very important. So when I was talking about this whole move up here, we can actually just draw that again over here, and we're assuming, for example, that we're going to correct somewhere in this zone over here, this red box over here, right? So what we can do here is, again, let's just say, for the sake of argument, that we reach the top of this red box. We correct just before the 0.015 psychological level, top of this diagonal channel, and the 1618 of the previous wave. So here, for example, we could easily correct down to the 382 fib retracement of this whole move up over here, this whole 600% move up. And that would give us a 33% correction. And if we came down to the 5, we would still be in a bull market. Like, that's the crazy thing, guys. We could get all the way up, we could get all the way up to the $0.15. We could correct 43%, even more. We could correct 50%. And look at this level over here. This level is pretty important, the 0.0728. Why? Because we found, first of all, it was a previous resistance over here. You can see this candle over here. And then we came down and we found support. So for this level to break would be bearish on the weekly time frame. And then, as mentioned, we would be looking at the monthly time frame for an even larger retracement. However, I don't think it makes sense to look at the monthly retracements just yet. I think it makes more sense to look at it in terms of the weekly uptrend still continuing as it has done for the past many weeks. Okay guys, so it's been a long time coming for the price prediction, which is what I know most of you are looking for, and I will now deliver. So the crazy thing is that since I started recording this video, the price literally already just moved up another 6%, and we're already approaching this 1.236 extension of the previous wave. Okay, so here's the way I see things will likely play out. Going down to the daily time frame and using my trusted brush, I expect that we'll likely see a move up like this, come down and correct over here, and then go to test the previous resistance zone up in this area over here. So again, just to summarize the reasons for that, well, number one, this is the 1618 extension of the previous wave, which presents a potential resistance. Number two, this would represent the top of this diagonal channel. It would come just above it and then come down, which is totally reasonable. Number three is that we have the psychological level of 0.015, which is just above it, so that might be hard to break. And then number four, looking at the RSI, which I think is an important thing to do, we can see that we are topping out at this 81 level. Now look at what happened the last times that we topped out at this level. Over here, we had a massive correction. Over here, 75%, that was crazy. Then over here, we had a correction as well. This was just a 21% correction. And this is an interesting data point, where here we touched up here, we had a small correction of 20%, then we came up again to touch this level, and we had a bigger correction of 25%. So what I'm expecting is that we're likely to see a correction again over here. And if I'm being perfectly honest, there's a pretty decent chance that we will correct before we even reach the 1.5 level. Nonetheless, I'm going to stick to my guns. I think that this increasing volume on the daily here is very impressive, and I wouldn't be surprised if we just see a really powerful move taking us past the 1236 and exploding up to 1.5. However, I would not personally be a buyer here. Firstly, because we have a resistance over here, 1, 2, 3, we have a potential resistance up here. And secondly, because I think we have a very strong chance of coming below this price at some point in the future. And I would see that most likely as coming to this level. At least this would be a very good level to buy at. This is for several reasons. Number one, we would be approaching the bottom of this diagonal channel. Number two, it would be a 0.618 correction of this whole move up, assuming that we get to the top over here. Number three, it would be a 0.382 correction of the whole move up, this whole 600% move up over here. And number four, it would represent the previous major resistance. Remember, we drew that over here, at which we would then potentially find support on the way down. And then if we were to go up again, I would imagine that we would go and test probably even higher than this. We would probably go and test even all the way up to $0.2. Okay, so that's it for me. Let me know what you thought of the whole analysis. I know it was a long video, but I do think it's important to explain why I'm reaching these numbers instead of just telling you what the numbers are. So let me know what you thought down in the comments below, and don't forget to smash and like that subscribe button. All right, guys, see you in the next one.